Thursday, so not everybody was open, but the market was open. That's important to us. The market was open. So when we think of the market and our investment portfolios, it's probably a good idea every now and then to pull the camera out of your mind's eye, back up a little bit, pull it back, okay? Take a look at, maybe the 10,000 foot level. Step back. Don't look at it so minutely. Too many people try to guess each wiggle and waggle of the market, and it's not possible. Just take a look at the bigger picture. So what's the bigger picture? We know what we're dealing with. We're dealing with inflation, right? We know we're dealing with the high interest rates because the Fed's trying to kill inflation by raising the rates, and by doing that, slowing down the economy. We know that, right? But the economic numbers are still looking pretty good, except for the inflation numbers and except for the housing industry. So certain industries are getting punished by that higher interest rates. And the fear is the Fed is going to go too far, like they have over and over and over again. But maybe you should step back and look at your portfolio, because you can't do anything about the market, but you can do things about your portfolio to deal with what's going on. Doesn't mean you trade out and get back in and go back. No, there's rebalancing to do to make sure that the risk you're taking is what you want and that you understand what risks you are taking. Some people don't have a clue what risk you're taking. Look at the cryptocurrency. Look how it's collapsed. People think, cryptocurrency is going to be the biggest thing. Oh, it's going to make us bazillions of dollars. Look at that. It's already made people bazillions. Well, it's also lost billions of dollars too. Take a look. You got to understand the risk you're taking. No one understands that risk of cryptocurrency. Everybody thinks it's just a way to make money. You just got to time it right. And whenever you hear anybody say, time it right, that ain't going to work. Not going to work. That's not how you build a good, solid portfolio. Just doesn't. So anyway, we're coming up on the Thanksgiving holiday in a couple of weeks. And with that said, we know we're dealing with a volatile market. We know we're into the best time of the year for the market. And we know we're in a little bit of rally, even though we had one down day. We had a huge update yesterday and a little bit of follow through today. Those are not negative things. Probably, it's not a bad thing we're dealing with. Because the question is, has the market been beat up enough this year? I don't know the answer to that. It's been beat up a lot. I can tell you that. I'm Steve Peasley. I'm here to help you with this on this radio program and podcast. I'm here to help you with any portfolio or stock strategy questions you might have. And I look forward to doing it. I look forward to answering those questions. So let's get to it. We got to have those questions. To start, this is a call-in show, so you start by calling in. We have a 24 hours a day, 7-day-a-week number. The number is 888-99-CHART, 888-992-4278. And we got lots of material to go through. The focus point today, beware of the 5 known portfolio pitfalls. 5 things that everybody knows about that a lot of people fall into anyways, and how to avoid them. What can you do about it? What are they? And time permitting, I got a few other things. I want to talk about cryptocurrency in Chapter 11 for FTX. You know who FTX is? That's the cryptocurrency, one of the third largest cryptocurrency exchange. Bankrupt. I want to talk about that. I want to talk about China economy. That's starting to look like it's going to rot from the top down to me. Rot from the top down. What do I mean? Well, we'll discuss that. And Musk, do you know Elon Musk has sold his Tesla stock 7 different times this year? 7 different times. Not just a few shares. The last time he sold 119 million shares. So, what does that say? Does that mean he's getting out? No. No, he owns a lot more than that. But we can talk about that. I think that's an interesting point to bring up. Anyways, you start the show. It's all about you guys. We will talk about the KPP Premium newsletter at the halfway mark. We'll do that. And we had some voice make questions, high growth stock questions, and a couple stock questions. We'll get to those too. So I've got it all planned out, everybody. for this episode and podcasts. And of course, you come first. We're live. 888-99-CHART, 888-992-4278. Market was up today. Wasn't up very big. The Dow's only up 32 points. Of course, it was up over 1,000 points yesterday. The NASDAQ was up 209, and the S&P was up 37. So it was an up day. Kind of unusual that the Dow was up so small, but it was up. That's all that matters. Okay, let's go ahead and go to our first listener line question.
Hi, Steve or Justin. My question today was about Fifth Third Bancorp, ticker FITB. I don't have any exposure to finance, so I was just looking to see if this is a bank that you guys think could be good, and if so, at what price. I have like a alert set for $30 right now. I think today it closed around 34 or so. So just whether you think this was something that would be good to add a position, or if I should be more patient, and if I should be more patient, kind of a good time frame to wait before getting in. I'm looking for your answer on the podcast. Thanks as always, guys. Bye.
Well, the banks are starting to look a little attractive to me. I think they're attractive, some of the prices that are. This is Fifth Third Bank, FITB, holding company for Fifth Third Bank, operating 1,117 banking centers in 15 states, $25 billion company. They're going to make $4 even per share next year. That's the estimate for 2023. And $3.39 this year. And it's a $36 stock. So it's a 9 PE? So if it's a 9 PE, is that inexpensive? Well, this stock's range is 4 to 17. So it's kind of on the lower half of the midpoint. So it's not cheap, but it's not expensive either. It pays a 3.6% dividend. My feeling is if you're going to get into this bank, I would probably get into a position now. I don't know if I buy my whole position, but I would get in position. I buy some so I can watch it closer. So I do think it's a good, solid bank. I really do. Okay, Fifth Third Bank, everybody. It's Friday, so the weekend is here, and, well, or at least almost here. In the meantime, you got to have some financial questions and investment questions. You got to have some. So let's answer them. Let's talk. Remember, you set the agenda where we go with this show. Call now, 888-99-CHART.
Why do listener questions make InvestTalk better?
Which of these would you recommend?
Because each caller presents fresh questions in their voice.
I was curious if you still think aluminum has a ways to go from here.
When do I know the right time to take profits?
Should I be looking for an exit? Should I be holding here?
And listeners instinctively realize that InvestTalk uniquely offers a welcome dose of investing satisfaction.
I think you have a terrific show, and I've learned a whole lot.
Hey guys, love your show. I've been listening for several years now, and I've learned a lot.
Justin Klein and Steve Peasley understand what investors need and want.
I would look at it from a tax perspective. If there's no tax implications, move on, find better ways to use that money. I'm
going with the odds. I think a half position now would at least get you in it and get you watching it so you won't lose track of it.
Don't forget to call InvestTalk, 888-99-CHART. The stock market is volatile. It's constantly changing. So how are you positioned? Is your portfolio properly balanced, or are you taking unnecessary risks? You can get guidance anytime for free if you go to investtalk.com and take the brief Riskalyze quiz.
888-99-CHART, everybody. My focus point today is beware of the 5 known portfolio pitfalls. Okay, these are things you just got to be aware of. And you need to adjust your portfolio if you're falling into these pitfalls. Number one, the first one, you're too aggressive. Your asset allocation is too aggressive. Now, not everybody's too aggressive, but you gotta shape your aggressiveness to your particular, ability to handle volatility. You don't have to deal with volatility if you don't want to. You can have a portfolio that has very little volatility. Just know that you have a very little return if that happens, and just accept it. That's number one, too aggressive. Number two, lack of diversification. Some people think, well, I got 7 different stocks in 3 different sectors, so that's plenty of diversification. No, it's not. Do you know how much diversification and what's the optimal diversification you should be in? Or some people have way too much diversification. Why don't you, if you have 150 shares, 150 different companies, you might as well own an index. So there's somewhere in between there is a proper diversification. And then, of course, you couple that with the proper aggressiveness that you want. You got to understand that what you're doing. And you got to be careful of a portfolio sprawl. What happens to a lot of people is you have too many different portfolios. We all know you have maybe a 401k, an IRA, an individual portfolio, maybe a joint portfolio. But do you need 3 individual portfolios? Do you need 2 IRAs? No. Because you'll lose track of all those different things. Okay? Another one, spending too much in retirement. You need to be very, very, very firm in your mind how much money you can have in retirement and how much you can spend without running out of money. You have to be very sure of that, and that don't overspend. Most people start spending way too much too soon. That's very common. And you got to make sure you are efficient in your taxes with your portfolios. Okay, you have a joint account, an individual account, IRA, 401k, different tax treatments to different types of portfolios. Those are the 5 things you need to be totally comfortable with and understand. If you don't, then you need to hire somebody to help you with that. Because it can be difficult. It can be. You don't have to do it alone if you don't want to. You can do it alone. It's not rocket science. It's just understanding how it all works, how to put this all together. Okay, let's pivot to another InvestTalk voice bank question. The number is always the same, 888-99-CHART.
Hi, my name is Jackie, and I'm just calling because I was wondering if I could get your opinion on 2 stocks. One is Myers Industries, MYE is the ticker symbol, and the other is Clarus Corp, CLAR. Just wanted to know your opinion on which you thought was the better company and a good entry point for that. Thanks. Bye.
Okay, Myers Industry. I can't do it's too hard to compare stocks. I go back and forth to the screens, and it takes forever, and it's very difficult to do that. So that's why I only give me one stock. Then you can call me tomorrow and ask me about another one. But let's take Myers Industry. Manufactures reusable plastic containers and horticultural trays and planters for that industry. Okay, they are a $781 million company. I mean, it's pretty small, but it's growing fast, growing by 14% in sales last quarter, and that's the slowest growth it's had in 2 years. So it's slowing down its growth, but still growing nicely. It's going to make $1.65 this year, and it's estimated to make $1.91 next year. It's a $21 stock. So you're looking at what, a 13 PE or so? Well, that's not bad. Maybe 12 PE. The range is 9 to 36. The return on equity is 18%, which is good. They don't have a lot of debt, which is good. They pay a 2.5% dividend, which is good. All that is good news. Mutual funds are net sellers over the last year, and so they're not buying anymore. I don't think this stock is exciting enough for me. It pays a 2.5% dividend. If I'm going to buy a 2.5% dividend stock, I'd rather buy a much bigger company that I know they'll continue paying the dividend. So, and you can get a higher dividend at a different stock. So it's not for me. Myers is not for me. We're moving into a break. I will be sharing highlights from the newest KPP Premium newsletter. That's coming up soon. So hang on, InvestTalk, 888-99-CHART.
Each day, InvestTalk listeners submit their finance and investment questions via phone or email. Would you like your question to be put near the top of the list? Just take a minute or two to leave a review and rating for InvestTalk at iTunes. And be sure to include a brief question with your iTunes review comments.
Good day, Jim Kennedy. Got a general question regarding some high growth stocks, primarily tech, Apple, Tesla, NVIDIA, AMD. I've been with all of the above for many, many years, so I'm still ahead of the game, even though they've been taken down of late. I seem to have noticed a bit of a bottom, and hopefully that's the case, and that's what I'm calling about. Your thoughts on the above stocks. I also own DVN, which had a nice rebound off of what were actually very good earnings. That's Devon Energy. Not really thinking about selling because I've got such a low cost basis and I'd have to pay capital gains. Your thoughts? Thanks. Bye.
Well, I've never been a fan of Tesla, not because I don't like the company. I love the company. I love the cars. They're very nice, and I'm all for electric engines. I'm all for that. I don't like the government pushing it because I think they can sell on their own. But Tesla's always been a very expensive stock. So that's one of my issues with Tesla is the cost of the stock. And I don't think that's done going down. I think that's going to be reevaluated more. But, I think some of the tech stocks, I have a couple, 3 tech stocks. Some of the big blue chippers I think are fairly priced. I think, did he mention Apple? I don't know if he mentioned Apple or not. For instance, I don't think Apple is too out of line in their price. Microsoft, I think, is not too out of line. So some of the big tech stocks are good, but I'm not sure we're done with our correction, but I think we're getting awful close. I do. I think we're getting close to being done. So appreciate the call. Thank you very much. 888-99-CHART, 888-992-4278. So on Friday, I usually give you a quick rundown on the benchmark numbers. The 2-year Treasuries yielding 4.33%, and last week is 4.67, so the yield came down. The 10-year Treasury 3.81, and last week it was 4.17. So the yield curve is still inverted, and that means that short-term Treasuries paying more in yield than the long-term Treasury, and that's not normal. That's not how it should be. And it's always been a signal for a recession, everybody. It's just a matter of when. So I don't like that at all. Gold had a nice move this week, up to $1,765 an ounce. It was $1,673 an ounce 3 weeks ago. So that's a pretty nice move for gold. But for the year, gold has done nothing. It was $1,900 a year, 28 weeks ago, it was $1,900 an ounce. And now it's only, $1,765. So it's done nothing for this year, despite high inflation, because the dollar has really increased as well. Silver, $20.74. Last week was $19.15. 33 weeks ago it was $23.94. So it hasn't done anything either, just like gold. So neither one of them have done much. Oil is selling at $88 a barrel. Last week was $91. Seems like it's settling in the high 80s, low 90s the last, weeks. So it probably will stay in that area. 31 weeks ago it was $113 a barrel. So, but if you go back further, 46 weeks ago, it was $66 a barrel. National average for a gallon of gasoline, $3.79. Of course, here in California, we're paying $5.45. Always a couple bucks more, it seems like. Always. For no good reason either. There isn't, really. It's just all about legislation, bureaucrats. That's all it is, really. More taxes. They want more taxes. You get plenty of taxes. They just can't keep spending. That's what it is. So anyways, Kentucky, if you want a really low gas price, go there. $3.47 a gallon. Not bad, huh? Anyways, cryptocurrency. So FTX filed for Chapter 11 bankruptcy. FTX is the third largest cryptocurrency exchange. like the New York Stock Exchange, the NASDAQ Stock Exchange. Why would the cryptocurrency need 3 exchanges? They have more than 3, but this is the 3rd largest exchange. Why would they even need them? Now, you've heard me warning you. I've warned you and also said that cryptocurrency is here to stay, but warning you that you can't have 10,000 cryptocurrencies out there. It ain't going to work. And more legislation is going to come down the pike, and most of these cryptocurrencies are going to go gone. And here's this guy, what had started this exchange, used to have $16 billion. Now he's got nothing. Billion to zero. This is the risk you're taking with cryptocurrency. The average person shouldn't even be thinking about doing anything with cryptocurrencies. It's too risky. There's no reason to mess with this. This is not a solid investment. It's going to Vegas. You're going to Vegas, you're rolling the dice. That's not investing. That's gambling. We want good, solid investments that make money, pay dividends, or grow their sales, have a product, something. That's not cryptocurrency. We're headed into a break. Justin and I are happy to play your recorded voice bank questions. If you make them, you got to make them. You got to call. We're live, 888-99-CHART. We're live every day, Monday through Friday, 4 to 5 Pacific time. 888-992-4278.
Got a question for Steve or Justin?
Just kind of wondering if this stock is a value trap.
Now is a good time to call InvestTalk.
I think there's likely a pullback here.
888-99-CHART.
There's one thing every successful small business owner knows. Finding and hiring the right people is very important. So they want to be 100% certain that they have access to the best qualified candidates available. That's where LinkedIn Jobs is essential. LinkedIn Jobs helps find the right people for your team faster and for free. It's easy to create a free job post on LinkedIn Jobs. To spread the word that you are hiring, add your job and the purple #hiring frame to your LinkedIn profile. And with LinkedIn Jobs, simple tools like screening questions make it effortless to focus on candidates with just the right skills and experience, so you can quickly prioritize who you'd like to interview and hire. This is why small businesses rate LinkedIn Jobs #1 for delivering quality hires versus leading competitors. Listen, you want to finish the year strong, and adding the right team member, the right hire, might help you do that. LinkedIn Jobs helps you find the qualified candidates you want to talk with faster. Post your job for free at linkedin.com/invest. That's linkedin.com/invest to post your job for free. Terms and conditions apply.
My name is Joanne. This is my father.
I know what's happening with my body. I won't be able to take care of myself.
When the time comes to get more support for your parents, CARE can help you find qualified caregivers nearby.
What would help me is if there could be somebody there that could check in on you.
I realize I have to do it.
The best decisions are made with CARE. Find help for your mom or dad at care.com.
Peloton, let's go!
This holiday, with the right music and the right motivation from world-class instructors,
we're going to pick it up a notch. It's the holiday season.
You might just surprise yourself with what you're capable of. Work out to thousands of live and on-demand classes, from running to cycling to yoga. Try Peloton risk-free with a 30-day home trial. New members only, not available in remote locations. See additional terms at onepeloton.com/home-trial. Peloton, motivation that moves you.
The stock market is volatile. It's constantly changing. So how are you positioned? Is your portfolio properly balanced, or are you taking unnecessary risks? You can get guidance anytime for free if you go to investtalk.com and take the brief Riskalyze quiz.
Steve and Justin, Art from Tucson again. Looking at a company here going along the theme of, I believe, what Justin pointed out, looking for companies that extract and or manufacture molecules from the ground as opposed to electrons in the air. Been on a quest to look for those companies. I've come across one called Albemarle Corp, ALB, and it's in lithium and bromine, and it manufactures specialty chemicals in that space. Looks like a pretty good long-term bet. Maybe not to buy right now going into a recession, but to at least put on the watch list. And I'm wondering what you think about this company. Love to hear your opinion, and I'll listen on the podcast. Thank you. Bye.
Well, I certainly like what they do, and I do think you should put it on the long-term buy list. It is a company out of Charlotte, North Carolina. It's a decent-sized company. I mean, it's large, $38 billion. It makes polymer additives, catalysts, and fine chemicals for the refining, consumer electronics, and other markets. And since there's pressure on China, and us versus China, and they have been producing a lot of these chemicals, more and more of this stuff is coming back to the United States, so which is a positive sign. So they're going to make $21 a share this year. Mind you, 2021, they only made $4 a share. Next year, they're going to make $27 a share. So they're growing very fast. Sales up 152% this quarter, this most recent quarter. The quarter before that was up 91%. But it's a $325 stock. It's not like cheap, okay? It's not super expensive, but it's at a 52-week high. You could buy some here because it's already at a 52-week high, and I can't tell you when it's going to stop going up. I can't tell you because it's in a pretty hot sector right now. But I much prefer you could buy it around $250. But I don't know if you get down there. But that's much better price, and there's a lot of support around that price. But I do think you should put it on your watch list at the very least and consider buying it. I do. The KPP Premium Newsletter was finished today, and it will be distributed to subscribers tomorrow morning. Now here's a little preview. In the market conditions section, I explain the market exploded on Thursday after the consumer price index showed more subdued inflation. Have we peaked? That's really the question, isn't it? According to the Bureau of Labor Statistics, the index, a broad-based measure of goods and service costs, increased 0.4% for the month and 7.7% for the year. Based on the initial report, the Dow Jones Industrial Average shot up 1,000 points. So the speculation is, have we peaked? Is that a peak? I don't know. If it is a peak, does that mean the Fed's now far behind, stop raising rates? Well, I think they're still on their raising rates. The market is hoping that that continued readings showing slowing inflation will persuade the Federal Reserve Chairman Powell that his aggressive rate hikes are working, and he can maybe start thinking about pivoting, not raising as fast as they have been. But I don't think they're there yet. I don't. This is only one report, and the Fed wants to take inflation down 2%, down to 2%. That's their target. It's always been their target. Always has been. They just ignore it when they feel like they want to ignore it. Because they didn't do anything when inflation was, rising up sharply. They didn't do anything. They didn't do anything when everybody was predicting inflation is going to rise. They waited till it came. Then they did something, trying to do something. You can tell I'm not a big fan of the Federal Reserve because they're reactive, not proactive. That's what I don't like about it. They can be more proactive. I think they should. On Thursday, the National Association of Realtors and U.S. home price growth slowed sharply in the third quarter. Home buying affordability remains near its lowest level in decades. Nationwide, the median sales price of an existing single-family home is $398,500, an increase of 8.6% from a year ago. Although sales have declined, prices have remained pretty elevated, pretty strong, even though the mortgage rates have gone up. Initial jobless claims, which is a proxy for layoffs, of course, increased 7,000 to a seasonally adjusted rate of 225,000. That's still fairly low. That's not that high. It was 218,000 the week before. Cryptocurrency had a rough week. Crypto exchange FTX, as I mentioned earlier, BK, fired up for Chapter 11. They lent billions of dollars worth of customer assets to fund risky bets in affiliates, and just not good. Not good. There's a lot more commentary in the newsletter. All you do is buy it. It's pretty easy. A couple of stock ideas we do every week. One was a senior Canadian gold mining company which produces precious metals from operations in Canada, Australia, Finland, and Mexico. It has a pipeline of high-quality exploration and development projects in three countries, as well as the United States and Colombia, by the way. It is currently trading in about the 50-day moving average range, $47.35. And KPP owns the stock in our managed accounts. Okay? The other one is an integrated manufacturer of nylon. It's a polymer resin, nylon 6 they call it, and fertilizer. Nylon 6 is a synthetic material used by customers to produce engineered plastics, fibers, filaments, and films, which are then used in products such as automotive, electronic components, carpets, sports apparel, fishing rods and nets, foods, industrial packaging, that kind of stuff. The company carries virtually no debt and has positive free cash flow right above free cash flow at about $183 million. They recently beat their earnings estimates by 43%. It's a smaller cap company in the chemicals and space over there, and I think it's a good one to have on your watch list. Of course, we name names in the newsletter. We name them. The reason why we don't do them on air is because the SEC frowns on that. We can't recommend stocks. We can only recommend stocks to customers that we know. Of course, when we do it on air or do a podcast, we don't know who's listening, so we can't recommend stocks. That's the technical reasons why we can't do it. So I gave you a little sample teaser what's in the KPP Premium newsletter. To subscribe, get your email, get it via email every Saturday morning. All you do is there's a Consumer Watch section too. All you do is go to InvestTalk.com and you'll see the subscription there. You don't have to buy a whole year. You can cancel anytime you want. There's no obligation for any length of time. Okay, let's grab another caller question. 888-99-CHART.
Hey guys, James from Washington State here. I have a quick question for you. I was listening to one of the episodes the other day, and you mentioned new manufacturing partnerships. Now that some of those with China have been dissolving, we've been pulling back from there. So you mentioned some other countries like Mexico, for instance, where we might form some economic and some manufacturing partnerships there. Wondering what interests you have, what specific type of manufacturing you guys would have interest in. I realize you can't give specific company names or anything like that, but just wondering more about, within that manufacturing sector or others, what are the industry types you like, or what are the different types of companies you think are going to be profitable in the future? Appreciate a response. Thanks very much. Bye.
Well, I think, one of the things I think is, looking toward the future. Remember, there's a book called Creative Destruction. I mention it every so often. And it talks about new industries being created and old industries being destroyed. And so I always have an eye out. Well, what's new? What's big? What's huge? There's huge industrial changes going on. And a lot of it surrounding electric vehicles, right? Clean energy vehicles. So there's got to be huge potential for partnerships with third world countries like Mexico, other than China. China is no longer a third world country, but other countries that might manufacture various parts and systems and provide various needed basic materials for electric cars. And I just think that's where maybe your eye should go to. Artificial intelligence, electric vehicles, clean energy, because politically, even though it might not be the cheapest energy, politically everybody in the world is pushing clean energy. I like clean energy. I just don't like it at the expense that they're pushing it to us. But I do think as an investor, you have to keep your eye, and that's where you point your eye to. That's where you look. Okay? The seasons are changing, but the stock market still presents the best opportunity for everybody. The dynamics of the stock market is one in which it always goes up over time. It's never not gone up. Yeah, you might get tired of waiting. You might be impatient because it hasn't done nothing this year. It's gone down this year. But 1 year is a very short period of time. Very, very short period of time. Over any length of time, the market goes up. That's your future. That's where you invest. But you need strategies. You need to know what you're doing. You can help prevent, portfolio shrinkage by knowing what you're doing. And if you don't, that's what we're here for. KPP Financial's here to help you. Justin and I will be happy to help you with any strategy you want, whether you want to be aggressive or conservative. We can help you. But first you got to define what kind of person you are. Are you an aggressive person? Do you want to be aggressive? That's okay. There's nothing wrong with it. But do you want to be? And do you know how to measure that? We'll help you with that too. We can measure it. We have tools to measure it. So if you want us to take a look at your portfolio, we'll do it for free, just like any other money manager. And we'll tell you what kind of risk you're taking. So you just call our offices at Irvine, California, in Southern California. KPP Financial, Irvine, California. I think after speaking with us for just a few minutes, you'll see there's a pretty big difference between us and the other guys. I think so. Because we buy and sell the same stocks for ourselves we do for our clients. We put ourselves on the same side of the table. I like that. We want to do that. Most competitors don't do that. So we want to help you. If you let us help you, we will help you. So give us a call. 888-99-CHART is our number. Now we're on InvestTalk, where we're open for all questions on the market, on the economy, anything financial we'll talk about. So let's go to Ricardo in Linwood. Hi, Ricardo.
Hi, Steve. Thank you for taking my call.
Thank you.
I wanted to ask you about DocuSign. When I bought a few shares at 104, and it went all the way down to 40, but it's up now about 30% last couple of days. Was it just oversold, or what do you think of the stock?
I think it's way oversold, yes. I think this is DocuSign, everybody. It's a $10 billion company. They're going to make $1.65 this next year. And the year after that, $1.89. Problem is they made $2.08 last year. Why did they make so much money last year? Because of COVID. No one wanted to get together and sign documents, so they want to do everything by computers. DocuSign over the internet. So I still think that's a trend that will continue to grow. I think their sales in the most recent quarter was 22%. They've been growing over 20% every quarter for 2 years now. And I frankly think they will continue to do that. They have a great return on equity. The problem is they have a lot of debt. That bothers me a little bit. But I think, remember, they were $300 a share. Now it's $53. Now, it was never worth $300 a share, but it's certainly well worth $53 a share. I think it's worth more than that, okay? I think you can put a 20 PE on this, and I think you put a 25 PE on this. So, but that only brings you up to about $50, $60 a share. So it's pretty much at value, but if they continue to grow like they're growing, the stock will go back to being overvalued. So I think this is a pretty good price. It bounced because it was way oversold. Now, can it maintain that momentum up? I don't know, because it's not cheap. It's just a lot cheaper than it used to be. Okay? So I do like it, Ricardo. I like the stock. Okay, let's squeeze in another question. 888-99-CHART.
Hey, can I have your opinion on buying this ETF for a long-term investment? FIW. Thank you so much. Bye.
Was that SIW or F as in Frank? Okay. FIW is First Trust Water. So it's a water exchange-traded fund seeking performance corresponding to the Clean Edge Water Index. I think clean water is an important growth area around the world. I think our water is, when I say our water, I mean the world's water is getting dirtier, so we need to clean it up. And so everybody's going to be, I think it's a good place to be. I don't know how cheap or expensive it is because I haven't looked at the holdings inside of it. It looks like it peaked around, what was that number? It peaked right around $95, $96 a share a few months ago. Today it's 81. I like the sector. I just don't know if I would have to check on the individual holdings it has before I could recommend it. But I do like the sector. This is InvestTalk. I'm Steve Peasley, and we have one goal here to help you achieve financial freedom. And our work will continue after this break. So get your questions in now. 888-99-CHART.
Got a question for Steve or Justin?
I'm calling to ask you opinion on an ETF called XLI.
And the question is, during the market downturn, do dividends stay fairly steady?
And I've got a question about warrant shares. I think that's the right term.
A warrant is a right to buy shares of stocks at a certain price.
What's your question? Now is a good time to call InvestTalk. 888-99-CHART.
This is InvestTalk. Is your portfolio balanced? Is it optimized? Is it delivering the types of gains you want and need to achieve financial freedom? Well, turn up the volume because there are many questions that deserve unbiased answers. And Steve Peasley is here now, ready to take your calls live. 888-99-CHART.
Hey, Justin and Steve, calling about WFG, West Fraser Timber Company Limited. The earnings are dropping, but the cash flow looks strong to me, and debt's pretty low. I was wondering what you think might be a reasonable entry point for this stock. I'm overweight oil and gas and have pretty good exposure to minerals, and looking maybe for a half position in something like this to sort of balance out some of my natural resources holding. Thanks a lot. Appreciate all that you do. Bye-bye.
Okay, so your question is, what do I think is a good entry point for West Fraser Timber, Canadian company manufacturing distribution wood products for home construction with more than 60 facilities. It's at $82.81. I would be considering buying it when it got down into the teens, 14, 15. Okay, this is a good stock to learn from. You got to step back and say, okay, the Federal Reserve is raising rates. Higher interest rates hurts what industries? What industry gets hurt the worst with higher interest rates? And your mind should go immediately to the housing industry because mortgages are now approaching 7% for 30-year fixed. And you know that the reports have been coming down from the housing sector that they're weakening sales. So why would you want, if they make they're going to make $21 a share this year, but only $6 a share next year. It's an $82 stock. So why would you invest in an industry that you know is going to suffer mightily because of high interest rates, and the Fed has not even slowed down yet raising interest rates? Whenever you look at a stock, an individual stock, look at the sectors it's in, look at the economic reality that's going on. Is interest rates rising, falling? Are we in a recession, moving to recession? Are we peak of growth? Are we in a war? Is war coming? You got to step back and say, okay, I know interest rates are rising. What industries does it help? And what industries does it hurt? And the housing industry is going to get hurt badly by higher interest rates. So stay away from it. Wait till it crashes. When it does crash, and it probably will, chances are very high, that's when you pick it up. That's why I say I'd like to pick it up when it gets to the teens. $16, $15, $16, $17 a share. I might be a buyer there, but not until. Okay? China's economy, it looks like it's starting to rot from the top to me. Why? You know, Chairman Xi, Xi, however you say your name, China has a 5-year, the chairman usually lasts 2 5-year terms. They've been doing that for some time now. Well, he decided not to do that anymore. Now he wants to be dictator of China because he got rid of that. At the same time, this miracle growth we've seen in China for all these years where they're stealing Western technology and then adapting it and then coming up with their own stuff as best they can. It looks like Chairman Xi has decided to put some brakes on that. He doesn't like the fact that there's competition with the government for invested dollars, investing in different technologies and so on and so forth. So it looks like he and his top men, because a lot of the pro-economic growth politicians, administrators, or whatever you call them in China, are out. Looks like it's going to be rotten from the top to me. That's what it looks like. And I think that we all have to be aware of it. I think the miracle of China is starting to show some cracks, like miracle growth, because they're going to change their policies. They're going to get much more repressive. They're going to get much more strict on invested dollars. They're going to come down hard on wealthy entrepreneurs. You watch. They already started it. It's just going to get worse. Be aware. Just keep an eye on that stuff. I'm Steve Peasley, and this completes another InvestTalk program. Justin Klein and I thank you for listening, and we encourage you to tell your friends and family members about our free podcast downloads. We would appreciate that. You can get your downloads anytime you want, iTunes, Google Play, or Spotify. And if you get your download from iTunes, please rate us. We would love a rating. It helps our exposure. We're at 47 million downloads. 47 million, that's quite a few. We're very happy about that, and we want to thank you for it. So, independent thinking, shared success, everybody. Have a great weekend.
InvestTalk is a trademark of KPP Financial. Because of the nature of the interactive dialogue inherent in the format of this program, it's important for the listener to understand that not all comments made will apply to them. Specifically, nothing said shall be taken to be investment advice, or shall statements on this program be considered an offer to buy or sell security. Because such advice is rendered solely on an individual basis and at times will require that the investor review a prospectus before investing. InvestTalk is a copyrighted program of Klein, Pavlis, and Peasley Financial, a registered investment advisor firm which retains all rights. For more information regarding KPP's investment advisors, call 1-800-557-5461. Steve Peasley is president, and Justin Klein is chief executive officer of Klein, Pavlis, and Peasley Financial. Thank you for listening, and your comments and questions are welcome on our 24-hour listener line at 888-99-CHART.